Hello and welcome back to this wealth management series. So today we're going to talk about another great concept which is very critical to understand. It's called as four levers. So basically there are four levers that you can truly use to build wealth, and at various times in our lives we use one or the other lever, or we use these levers in varying proportion to build our wealth. But understanding these four levers and the impact they have on creation of your wealth can go a long way in deciding how much wealth you end up with. You have a lot in your control, so don't feel that wealth creation is something that's not much in your control. If you understand these four levers, you will know which lever to attack when, and that will really help you get a lot of control over the kind of wealth you're going to generate. Ask yourself these questions, and I'm sure you must have asked yourself these questions at some stage of your life. You seem helpless to generate big wealth in the absence of big income. You really miss big income, and you feel that unless you have that big income, it's very difficult to generate huge wealth. Your income seems to have saturated with time. Further growth in your income is either difficult, or it is at the expense of your family time, or probably at the expense of taking away a lot of relaxed time from you, giving you a lot of stress. So you don't want to do that, and that you feel becomes a bottleneck as far as your income is concerned. The saturated income is perhaps leading you to a situation where you feel you cannot save enough to really generate huge corpus or a huge wealth. Your income is going up, but your wealth is not. Now, the other scenario which is possible is that your income is actually going up at a good pace, but your wealth is not, which basically means that you're still unable to save enough money to build huge wealth. You don't know why it's happening or what is actually happening to the income that's coming in, but there's something happening in your entire flow of cash where your income is getting leaked, and it's not really contributing to that extent to your corpus as it should. A lot of studies have shown us that when the income goes up, it's not your savings that go up, it's actually your expenses that go up. And the moment, you must have seen this example a lot of times among the colleagues that you work with, among your friend circle, among your peers, that the moment income starts growing, people start looking at spending that money in various options that they have today. Today we are not short of options to spend money. The next version of the mobile, the next gadget, the next big car, and so on and so forth. A lot of other principles that we studied earlier, like for example pay yourself first, can really help you to convert that increased income to increased savings and then therefore huge wealth. But a lot of times we do not pay attention to those wealth management principles. There is just too much you're giving up in taxes. Now that's a feeling a lot of people have, that we really give too much in taxes and we don't get that much in return from the government. You hate when you see X amount getting deducted for every month from your salary slip, and you feel that that amount is just too much to be given every month to the government. You want to do something about it, but you don't know much how to save those taxes or how to get smarter about it. Or perhaps you don't have time to really plan too much about taxes and tend to do a lot of mistakes since they have less time to really plan for it. For example, I know a lot of people who go on to buy insurance policies just for saving taxes, and ultimately they end up investing in assets which really do not contribute much to their wealth. You feel you know your family expenses. Now that's a very common thing which we observe in among a lot of people who feel that they really understand what their family expenses are, and it seems they are in control, but still they're not able to save much. And when we really give them a sheet to start tracking their family expenses on a daily basis, then after a few months it comes as a surprise to them or a shock to them that, oh, actually their family expenses are 1.5 times they thought or 2 times they thought earlier, and that gives them a reality check on where the money is really leaking away. So Just by having the feel of family expenses not enough. We're going to talk in detail about how we can really manage our expenses well, how we can really track our expenses well. You don't have time to really track your wealth. Now you seem to be too busy earning money and looking for the next increase, the next promotion, that you don't have really got the time to manage the wealth that you've already earned. This is one of the big factors that really makes us end up with lesser wealth than we really deserve. So we're going to talk a lot about this as we understand the four levers. So we're going to understand seventh wealth creation principle here, which is four levers. And in the previous modules, we've already studied about the amazing power of compounding, pay yourself first, start early, get started, sharpen your financial sword, diversify. And today we're talking about four levers. We'll also learn how this time-tested principle of four levers works for us and how we can really use this to focus on all the levers at the right time to generate huge wealth for us. So let's look at what these four levers are. Now if you look at the screen here, you will see the four levers. The first is your gross income. The second are the taxes that you pay. Third is the expenses, and the fourth is the wealth corpus. Now actually if you see, these are the only four factors which are in our control, which we can really use to generate big wealth. The first one, gross income, and the upward arrow here indicates that we really want to increase our gross income if you want to generate big wealth. And income could be your salary, your business income, your rental income, and any other source of income that you have. And what we have realized over working with hundreds and thousands of people who are trying to get financially free is that a lot of people focus on this. So this lever really gets a lot of focus. And you can see it all around yourself, among your family, among your colleagues, and among your peer circle, that there is really a lot of focus in terms of getting the increments every year, getting the next promotion so that salary can go up, getting the next business deal, getting the next client so that your business income grows up. So there's a lot of focus here, definitely. And this lever, in fact, on the other hand, is actually overutilized by most of us. We spend the majority of our time really trying to push our income up, and because we believe that pushing our income up is perhaps the only means to really build huge wealth. And with this kind of misconception, we perhaps tend to unconsciously spend most of our time trying to increase our income. Now once we generate this gross income, the next place where we have a little bit of control is the taxation part. What we intend to do is, of course, reduce the taxes as much as possible, which basically would mean investing smart. Now taxes actually could be of various kinds. It could be income tax, wealth tax, capital gains tax, and so many other taxes that we have, direct and indirect taxes. We tend to reduce our taxes so that ultimately the net income that comes in our hand is as high as possible. Now our experience shows that people do have some attention to taxes, they want to save taxes, but really are not knowledgeable enough. Tax rules are complicated, tax rules keep changing almost every year, and people are not really updated on the latest tax rules to get the maximum benefit out of them. And partly the reason is since they have spent most of their time in the first lever, which is increasing the gross income, they hardly have any time left to really understand the second lever, which is how to reduce taxes. This is slightly, I would say, under-focused in majority of the people that we have interacted with. The third lever is your expenses. Now this is again, as we talked about earlier, most of the people feel that they really understand the expenses, that they control whatever best they can, and there's nothing else that they can do about it. And typical expenses comprise of your grocery, your bills, your education, insurance, and so many other expenses that you do on a day-to-day basis. The fact is that most of us do not do a comprehensive tracking of our expenses, and if we really look at it, what we've realized is if people start tracking their expenses on a day-to-day basis, First, they get surprised with the kind of expenses that their family is doing. Second, they start getting better control over the expenses. But this, of course, needs every day 2 to 3 minutes sitting down, starting to jot down what was spent under what head, make a simple spreadsheet and start entering that data. Now, this needs only 2 3 minutes a day, but it needs a lot of discipline and commitment to do that, because you have to do it every day as a family. And therefore sometimes it becomes difficult for people to really do it, and again it gets less focus. It gets, in fact, much less focus than it deserves, and there's a lot of control that you can get on your expenses once you start really tracking them on an everyday basis. And after you've spent your money that you have to spend on your expenses, what's left is your investable surplus, and that really contributes to your wealth corpus. Now, your wealth corpus, which is the fourth lever, happens to be the ultimate lever that's going to set you financially free, that's going to really build huge wealth for you. And the fact is, we really do not spend enough time to understand what this lever can do for us, how this lever, how this corpus can help us generate more money. Now, the size of your wealth corpus depends primarily on two factors: how much saving potential you have every month after all tax deduction, after all expenses, and how much return on investments your wealth corpus is giving. So let's say you have a wealth corpus of 50 lakhs, how much it gives back to you every year. So does it give 5 lakhs to you every year? Does it give 7 lakhs, 8 lakhs, 9 lakhs? So these are the two factors that are really going to influence your wealth corpus. And our experience shows that in majority of the cases, people have no idea about how much return they are getting today from their wealth corpus. Forget about how much your corpus can potentially give. And your corpus comprises of all kinds of investments that you have done, whether it's in fixed deposits, recurring deposits, provident funds, insurance, savings account, gold, real estate, mutual funds, stocks, everything. And because of this, people are really not able to get the kind of corpus, generate the kind of corpus that they should be generating. So we're going to now talk about each of the four levers and understand what is their significance and how they can really help us build a better corpus than we have been able to successfully do it till now. So first, the gross income. So the general experience is that most of us are too heavily focused on improving our gross income for wealth generation. It definitely impacts our health, and we are by no means saying that you should not be focusing on gross income. It's definitely a big lever to really leverage to build huge wealth. But the lever is not that big as we think, because normally the people who earn a lot also spend a lot, and that really doesn't contribute to your corpus. So it is a big lever, but not to the extent we think. And the impact of this lever on your overall wealth portfolio is only medium to high, depending on how disciplined you are in terms of savings. The worst part is it takes away our time to focus on the other three levers, and we rarely ever focus on the other three levers. From a time input versus increase in gross income, this lever is extremely inefficient. Yes, increase in gross income is very good, and it really helps us save more, build our corpus more, but the time we spend in increasing our gross income, it could be the time doing your job or your business or whatever, this lever is extremely inefficient with respect to that. It just consumes most of our time and really doesn't generate the kind of increase in income that we really expect it to do with the time that we spend. Our suggestion, our recommendation would be keep the focus on this lever, but do it only to a moderate extent. Don't spend all your time just focusing on increasing the gross income. There are other levers which we need to focus on. Move to the next lever, which is taxes or net income. Now, most of us, based on our experience, have a very poor focus on improving our investable surplus by saving on taxes. And we do a lot of mistakes, as we talked about. typically we only do what most do around us. So we look at the people around us, the colleagues around us, the friends around us, and we see where they're saving taxes, what they're trying to do. We read a little bit of newspapers, magazines to understand a bit of taxation, and we just go on and invest. We do not really make focused efforts to get smarter about taxes. And I can tell you there are hundreds and thousands of complex taxation rules, and therefore there are hundreds and thousands of smarter ways to really save more taxes. But of course, it needs time, it needs attention to really understand those rules and start implementing those tax saving principles in your life. The impact of saving taxes on wealth portfolio can vary a lot, but it is definitely between average to medium. Slightly lower than the first lever, but definitely needs attention. Our recommendation would be you must bring a moderate focus to this lever. Instead of just looking at it only at the end of the financial year, how to save taxes, I think you should consistently be spending a little bit of time or some fraction of your time, maybe 10% of your time, on understanding this every day or every month and trying to get smarter about saving taxes. The third lever is about expenses. Now that's where a lot of people get caught on the wrong foot. Most of us feel that we know what our monthly expenses are, and that's, I would say, 99% people feel, without actually tracking it, that they know what their expenses are. And I was the same. Before I really got all this wisdom, I was exactly the same. I thought I'm spending X amount. But actually when I started to track my expenses, I was spending more than 2 into X amount. More than double. That really gives you an insight where you're spending money, and the moment you get the insight, you automatically try to reduce your expenses. Nobody has to push you. And we feel that there's no need to track, but then a lot of studies have proven that everyday tracking of your expenses can reduce your overall expenses by as much as 20%. And we have seen this in a lot of the cases where our freedom seekers have connected with us, and we have asked them to start tracking their expenses on a monthly basis, on an everyday basis. They have come back and said that yes, they have started to control their expenses. Remember that rupee 1 spent less, which means less expenses. So if you save rupee 1 via your expenses, it's almost equivalent to rupees 5 earned more. Why do I say that? Because you heard the saying money saved is money earned, but then I would go on further and say money saved is almost equal to 5 times the money earned. Why do I say that? Because typically if you earn 100 rupees, you only save 20 rupees. So if you save 20 rupees, it's like earning 100 rupees. Now if I'm able to save 1 rupee of my expense, it's almost equal to earning 5 rupees extra, isn't it? So understand the importance of saving on your expenses. We have extremely low focus on this lever because we really do not track it. And if you don't track it, the focus will never come. Its impact on wealth generation is moderate to high. Remember, it's the same as the first lever. The first lever was also moderate to high, this is also moderate to high. So the amount of time, now look at the amount of time we spend in trying to get a better salary and the amount of time you spend in trying to manage your expenses. They're no way matching, but their impact on your wealth creation is almost the same. So which essentially means that this lever is getting ignored, and we can ignore it to our own peril. Everyday tracking of expenses, this is our recommendation. This is the key to get the maximum benefit out of this lever. There is no shortcut. You need discipline, you need commitment, you got to go after it. The fourth lever is where we spend the least time. That's returns from portfolio. Most of us don't even know what are our returns from our existing investments we have done. So probably you put some money in fixed deposits, we know it's giving 8 to 9%. We put some money in mutual funds, we roughly know how much it gave us after 3 years of investing. But what was the annual return? Difficult to say. What is the overall annual return of your entire savings, entire corpus that you have? You have to do some calculation, some weighted calculation. Some money is lying in your savings account earning 4%, some money is lying in gold earning 7%, some money is lying in your fixed deposits earning 9%, Some money is in your PPF earning 8.5%. Some is in real estate earning 12%. Some is in mutual funds earning 15%. And different amounts at different places. Nobody has a clue of how much my corpus returned last year. Can you tell me how much your corpus returned last year? We don't have a clue. This is our situation on the fourth lever. So we have no idea what is it returning because we're not spending any time on it. We don't even know whether such a lever exists. And the worst part is, this is the lever which can give us the best possible chance of huge wealth creation. It's completely ignored and is the most powerful. The impact of this lever on wealth creation is high to very high. Maximum impact out of all the four levers. And as your wealth grows, its impact keeps increasing. Getting smart about investing money needs a change in the way we think about money. So how to invest, where to invest, what is the return I'm getting, how can I get better returns? You need to change the way you think about money. There's no point running after money. You got to make the money run after money. So you are the CEO of your life. Every asset that you have, every investment, every saving that you have, every rupee that you have invested is working for you. Your money must perform, give you good returns, or you're going to change the way you invest. So if you put your money in, let's say, a recurring deposit, it's giving you only 8%, while the same money, if you put in a debt-based mutual fund, can give you 10% with almost same risk. Why not earn 2% better returns? Remember that a 2% increase in your returns from your portfolio is easily possible with minimal time investment and can beat all other levers hands down. And I'll show you with an example how it happens. So here's an example. There is a guy called as Rohit who has a salary of rupees 80,000 per month. His expenses are approximately rupees 60,000 per month, which essentially means that he can save and invest rupees 20,000 a month. And he has been doing it, very disciplined, very committed. He's been doing it for the last 15 years. Because of this discipline and commitment over the last 15 years of working and saving, Rohit has been able to accumulate a corpus of almost rupees 1 crore. His returns from the corpus is approximately 8% per annum after tax. Now this is a cumulative return from the corpus because some money is in savings which is earning less than 8, some money is in mutual funds which is earning more than 8. So this is a cumulative corpus return. He's working very hard for his next promotion and he knows that if he gets it, it's likely to increase his savings by rupees 10,000 per month. He's very highly focused on lever 1. Unfortunately, since he's so focused on lever 1, he does not have time to sharpen his financial saw and his entire focus is on the next promotion. So there is absolutely no focus on lever 4. So this 8% returns that he's getting from his corpus, if he focuses there, what happens? What if he's able to get 2% better returns there? So let's understand how wise is Rohit. So if Rohit kept his focus only on promotion, which is lever 1, let's assume he gets a promotion, though there is definitely a big risk in terms of getting a promotion because there are definitely more than one contenders for that promotion, and his success really depends on how others also perform. But in any case, even if we assume he gets a promotion, his savings go up by rupees 10,000 a month, which is good. That's the benefit of focusing on lever 1. But since he devoted all his time on lever 1, what would have happened if he would have partially given some time on lever 4? Probably would have got some promotion, he would not have got promotion. But let's see what would have happened. If he focused part of his effort on lever 4 and was able to get 2% better returns on his corpus by investing a little bit smartly, his returns from the investments would increase by rupees 2 lakhs per annum. So his corpus, which was 1 crore, and he gets 2% better returns, which is equivalent to 2 lakhs a year. And if you convert into a month, his effective income goes up by approximately rupees 16,000 per month. And if he's smart, this could be tax-free income, while his 10,000 increment would all be taxed. This increase is much more in his control. He just needs to make his money work smartly. It's not dependent on somebody else. This increase keeps becoming bigger and bigger and bigger as his wealth grows. So next year, when he has 1.5 crores, 2% of 1.5 crores would not be 2 lakhs. It will be 3 lakhs. So that's how your money keeps growing if you focus on lever 4. So to summarize, we must learn all 4 levers to build huge wealth. All levers need equal time and attention. Lever 4 giving the best return on the invested time. So every lever needs time. Don't just focus all your time on lever 1. All 4 levers need time, while lever 4 gives you the best return on the invested time. The only problem with lever 4 is it needs a different thinking pattern. You need to really think of money as your employee working for you. And if it's not performing the way it's supposed to perform, you gotta check that asset out, get a new asset in its place which can perform better. You gotta make your money work for you if you really want to build serious wealth. So that's it for this particular module. You can write to us at help@manoj-arora.com, or you can visit our website www.manoj-arora.com. Thank you.